can get people to answer your questions at a pretty much, real time answers. So what does the club offers you? The club offers you a few things. Number one, a lifetime membership if you decide to actually subscribe with us. That gives you unlimited access to pretty much everything that the day trading club offers you. Number two, comprehensive trading programs that's actually tailored to your experience and risk tolerance. A lot of people they always hear about trading plan, trading plan. You have to have trading plan, or they go on YouTube and they see all of these gurus telling them this is the strategy that's going to make them millionaires or turn their $800 into $1 million. But what they ignore to say, you have to have the same exact tools. If they are trading, on a trading desk in Wall Street, they are a lot closer to the market than you are doing it on your cell phone. So it will never work the same way. Even if you take his strategies, it will never work the same way. You have to develop your own strategies with your own profit objective, with your own risk tolerance parameters. That's how it works. That's how you make money. Live trading. There is a chat room that you can actually pretty much follow and see other traders doing their trades and discuss ideas. And some people, they like to copy the trades, even though we would rather teach you how to trade than just ask you to let you copy our trades. Mentorship to build each trader, and to build his trading plan, just like we discussed. You need to build your own trading plan using your own profit goals and your own risk tolerance. Using somebody else's plan blindly is not going to work for you, because no two people are the same. Even when it comes to the psychological makeup of each person, it's just not the same. So taking somebody else's trading plan will never work. You have to develop and build your own plan. And we are here to help you build that trading plan that fits your style. Uh, what else? Funding trading. A lot of people asked us about the funding traders programs, which means you trade our own capital. We can help you actually provide you with capital if capital is a problem, as long as you show us that you're consistent with your actions, not consistent with profits. There are two different things. Consistent with your actions. So if you have a trading plan and you say this is my trading plan, we're going to check to see, are you following the plan, or are you just there for the looks? You have to, once you show us that, doesn't matter if you're winning or losing, we will fund your account. That's because we are sure trading plans will not let you down and will never let you lose our money. We guarantee that you're going to be actually making money, that we are willing to fund your account and split the profits. And last thing is, pretty much we can help you get licensed. A lot of people that they sign up for all of these courses and stuff like that, they don't understand. If you really want to be a proprietary trader and you're a U.S. citizen residing in the U.S., you have to have a license. And we can actually line you up with a firm in Wall Street that gets you sponsored to take the test. And once you take the test and pass the test, you become a licensed trader, which means you can go to any firm in Wall Street and use their own capital, because you're already licensed. So if you need some help, let us know and we'll help you out. Let's talk about why would you day trade for a living. Day trading brings a lot of benefits to a lot of people. Matter of fact, there are certain people who fit the day trader profile. And let's talk about these advantages and benefits of being a day trader. Number one, a day trader controls their own time. It's not a 9 to 5. You could work from the first half an hour of the market and book your profit according to your plan. You can work the last half an hour. You can do it from 9:30 to 4 o'clock if you're trading securities. You can do it all day if you trade forex or cryptocurrency. There is a million ways you can make a living without having to stick to somebody else's timeline, like your employer or your boss. That's one of the biggest things. Number two is you don't have to answer to any boss. A lot of people are just, especially at the end of their careers, they just want to feel the freedom. They've been working for 20 years, they're retired or not retired, they just want to get out of that place. They don't have to answer to boss, or they don't want to answer to a boss. This day trading for income is actually going to give you that kind of advantage. Number three, at this time and age, day traders can work remotely. That's the keyword, remotely from home, making it possible to anyone to generate an income. If you're a housewife and you don't have a job, you can generate an income just using your computer or smartphone. If you are a mother of 5 kids and you have your morning hours be, while the kids in school, you have a couple of hours to yourself, you can make a living day trading. If you are a construction worker or an employee or a mechanic or whatever you are, and you have a lunch hour or a break time for an hour or so, you can generate an extra income day trading on your cell phone. Actually, most of our students are actually people who actually hold a full-time job, but they're doing this as an extra income. So there is no excuse for not to have skin in this game, because I can tell you right now, at a certain point, almost everybody is going to be involved in the market. Doesn't matter if it's stock market, crypto market, bonds, futures, commodities, options, whatever. Everybody is going to have some skin in the market. That's because technology made it so possible for people to trade a real time on their cell phones. You have no idea how it was 20 years ago or 10 years ago even. It was just ridiculous the way they traded. That's why day traders didn't make any money in the past, because they were using their call, making phone calls and getting scammed by stock brokers sometimes that go after their own benefits, not the traders' benefits. But today you're responsible because you're the one clicking on that little screen or your keyboard. So remotely is the keyword here. Day trading does not require college degree or formal education. I think this is one of the best thing about it too. Everywhere you go, they're gonna ask you for experience, college degree, master's degree, whatever it is, and it just same thing. I think at this time and age, formal education became a not a net positive investment. I'm not against education, of course. I'm educated myself with a master's degree and everything else, but I just don't see it as a net positive investment anymore. You spend so much time in school that you could be making money. So this particular career offers you no ceiling to how much money you can make without college education. Cannot be any better than that if you're good at it. Day trading does not limit you to a maximum pay. Does not limit you to a maximum pay. Just like any other job. The potential is pretty much, the sky's the limit, like they say. If you're good at it, there's no ceiling to how much money you make. And we do hear a lot about a lot of people, young kids, young people, making tremendous amount of money that they know nothing about the stock market. That's because they took it as a business and they implemented that business plan or trading plan, and they were able to make money, because a trading plan is just like a recipe for a dish. The dish doesn't care who is cooking that meal or that dish. As long as you follow the recipe, you will get the dish. As long as you follow the trading plan, you will get the profits. It's the same exact way, so it doesn't limit you. With today's technology, just like you said, day traders use their computers, phones to generate extra income while working full-time or running their own business. So you hear a lot of people about saying, I'm a full-time day trader. What if you don't want to be a full-time day trader? What if you're in your current job because of your health benefits or your family or whatever it is? You still can make money day trading. What if you're running your own business or a family business? You still can make money day trading. So there's no excuse not to get involved in day trading at this time and age. It offers you so many benefits with so little down, as long as you know how to limit your risk and follow your trading plan. It's like here on this side right here. It says, "Why would you trade for a living? Be your own boss. The potential for unlimited profits. There's no ceiling. You can work from home or remotely from your job, and you can set your own schedule. Cannot be better than that. Absolutely cannot be better than that." My assumption is some of you don't even know what day trading is. So let's talk about that. What is day trading you think it is? What did you hear about it? Day trading trades typically securities, right? Securities could be anything. Could be stocks, options, commodities, futures, cryptocurrency, Bitcoin, bonds, gold and silver, whatever it is, you trade that. You buy and sell it. The name day trading means you buy and sell in the same day. That's all it is. That's hence the term day trader right there. You buy it and you sell it the same exact day. You don't keep it until it goes to the moon, like Elon Musk always keeps saying. Things are going to go to the moon and stuff like that. Day traders, like we said, they hold it for hours or minutes and they sell it the same day. What you're trying to do is you're pretty much trying to profit from short-term price movement. So a lot of you know that the stock market does not just go up, right? It goes up and down, up and down, up and down, up and down, and the investor make money from that. So you buy here as an investor, it goes up, it goes down, goes up, goes down, goes up, goes down. After 20 years, the investor is going to make money, hopefully, because everything gets expensive. All prices gets inflated, including the stock prices. So yes, you buy stock as an investor, you buy stocks for cheap. And after 20 years, when you retire, you'll have more money in your account. This is just a given. Same exact thing as like a loaf of bread. If you buy a loaf of bread today for today is going to be, let's just say $5. But if you buy it in 2042, that loaf of bread is not going to be $5. It's going to be $20. $40. Who knows how far inflation is going to go? Stocks are the same thing. That's where appreciation happens for investors. But what happens with day traders? Day traders, they use these fluctuations to amplify their profits and make a lot more money than investors. Just like that. So what they do is you buy here and you sell here. You buy here and you sell here. You buy here, you sell here. You buy here, you sell here. You buy here, you sell here. And it continues to build up. So what's the difference between investment and day trading? Investors, they go in there for the long haul. They put their money, they forget about it. They don't need the money, of course, so they just leave it for 20 years. A day trader either cannot afford to leave the money for 20 years or doesn't want that, or wants to actually profit from the fluctuation by amplifying their earning. So instead of making just $20, the investor makes $20 or double their money in 20 years, for example. The day trader can, bring a 1,000% return during the same time by just doing that, because he buys cheap, sells expensive, buys low, sells high, buys the same thing low, sells it high, buys low, sells high, and it just continues to accumulate money. So day trading is more like an ATM machine. You go every day to the ATM machine and you just pull $500. If you're trying to pull more than $500, most likely the ATM machine would not let you because of the rules of the bank. Day trading is the same thing. Yes, you can pull, money from the stock market, but just be realistic about how far you can pull. You're not going to pull $100,000 from the stock market every single day unless you're actually willing and you have this account size where you're willing to risk $50,000, $20,000, just be realistic about your trading goals and trading plans. So again, to recap that, the goal is to profit from short-term price movement. Day traders can also use leverage to increase their profits. What is leverage? Leverage is simply you borrow from the brokerage account. You borrow from that broker. That broker is going to give you, let's just say, a margin account. I'm sure you heard about a margin account. You put $1 in your margin account, you will be able to trade 4. Your buying power is $4 for every dollar you put in. Proprietary traders, they start with 20 for one, $20 for each dollar. So if he has a $10,000 in account, he's trading $200,000. Proprietary trader who actually got the trust of the firm, they trade 100 to 1. You put $10,000 in your account, you'll be able to buy positions up to $1 million. That's how it works. That's why sometimes it's important to be a licensed trader if you're good at it. What else? There's certain securities offer you a built-in leverage without having to borrow money from the brokerage. For example, options can offer you up to 30. I'm just giving a number, 20 or 30 for every dollar, which means 1 to 30. What does that mean? Let's say you are buying Apple, and Apple is $90 share, right? The contract is only $3, for $3 times 3, which is 100 times 100, which is 300. So for $300, you can control 100 shares of Apple, which comes down to 9,000. For $300, you have the potential to make as much money as somebody owning 100 shares of Apple, giving you extreme leverage. But same thing, risk management is important here. So let's recap that one. Day trading is pretty much refers to the action of buying and selling the securities during the same day trading windows over the stock market hours. In New York, the stock market is 9:30 to 1600 hours, which is 4 p.m. You buy securities at a low price, you sell them at a higher price, you pocket your profit at the end of the day. How much day traders make? That's a beautiful question. We get asked all the time. So honestly, like we said, there is no limit to how much money you make. So what we Googled this one, what's the average for a day trader to make? Now, keep in mind, a lot of people lose money, a lot of people make money, but we're looking at the majority of the people. So we went to Google and we actually Googled how much do a day trader make, and the answers came back at $116,895 per year, or $56 per hour. That's the average of the majority of day traders, according to their tax records. So that's exactly what it is. So you do have, if you're going to be an average day trader and you're going to be able to execute your trading plan as planned, you have the potential to make $116,000 a year. That's a realistic thing, assuming that you're not going to be a top guy where you're making millions of dollars, assuming you're not going to be on the bottom half where you're just losing all of your money and just walking away from it. $116,000 is a number here. So how do you prepare yourself to be a day trader? Simple, not easy. How you prepare yourself to be a day trader is simple. Day trading is simple, but it's not easy. I can tell you that. It is simple, not easy. Let's talk about it. Day trader must do a few things. Number one, you need to understand the market conditions. What kind of market are you in? Are you bullish? Are you bearish? I'll give you an example. Before COVID-19, the market had the longest bullish trend in history from 2009, from March 2009 to March 2022, 13 years. That market was just growing nonstop like a train. Did not go much left or right. It just went straight up 45 degrees. What happened was coronavirus hit or COVID-19 hit. It went into bearish market. Bearish means downward. It's going downward, right? But it did not stay bearish for a while. It actually reversed once the government starts giving out all these stimulus checks. It reversed in a V-like thing and went double from what it was before coronavirus, before COVID-19. It went bullish, extremely bullish. What's the market conditions right now? Since you know um, the Fed are trying to curb inflation, bring the market down uh, a little bit, so kind of things kind of cool down because it went out of whack. So what they do is they pull in the money out. They pull in all of these all these dollars, trying to pull it back, or some of it at least. So what's happening is the market's on a steady decline. At this time, the market is about 35% below the high of COVID-19 time. So at this time, it's safe to say we're in a bearish market. So how do you actually benefit from all of these ups and downs? Because a day trader, what a day trader is looking for is volatility. You're looking for the ups and downs. Investors not looking for that. Investors looking for just a steady up. Like somebody started investing in 2009 and pulled his money in 2021. This guy is super happy because it was just a steady, smooth incline. A day trader does not want that. There's no money to be made in a smooth market. A day trader wants the volatility, wants the stock to shoot up and shoot down. And that's exactly the perfect time for it to be a day trader. So let's look at that graph for a second. You look at this graph and you'll see the price is going up right here, steady, and suddenly starts pulling up. What do? Yeah, you buy. You buy here at the beginning of the day, and as soon as it starts to come down and you see right here the curve, it's time to sell. So you benefit from this, the difference between this one and this one. And it becomes a game of zeros. For example, if you buy one share for $20 and you sell it for 21, you will be making $1. What if you buy 100 shares for 20 and sell for 21? You will be making $100. What if you buy 1,000 shares for 20 and sell for 21? You will make $1,000. You see, the difference between a small account and large account is just nothing but the P&L. You're risking $1, you're getting $2. You're risking $100, you're getting $200. It becomes a game of zeros. So when you build up yourself to start actually trading 10,000 shares, you're going to be doing the same thing. That's where consistency comes from. You're going to be buying the same stock at the same price and selling it at the same price, but you'll be making $10,000 a day. That's where consistency comes from. If you can do it at $1, you can do it at $10,000. You can do it at $100,000. You can do it at $1,000,000. The zeros do not matter. The action is the same. The P&L is different. So what does that tell you? You develop a trading strategy that will fit your account size. So if your account small, you start with 100 shares. If your account is large, you can do 10,000 shares. So you have to have that trading strategy built on your psychological makeup, your trading account size, as well as your risk tolerance. Because a guy that has $10,000 in the account may not want to risk $100, and we have seen it a lot. It depends on your psychological makeup, risk tolerance, and your account size. We will help you. We will help you actually identify these things, and will help you build up your trading plan. How you build a trading plan? A trading plan has to fit, like we said, we need to understand where you're at in that day trading journey, and we'll help you out build up that trading plan based on what you're looking for. A lot of people, if you're serious about this and you really want to make some money, a lot of people, they set up a demo account. This way, when you start looking at this, when you start building your trading strategies, you are not just wasting your time, because there is that learning period or learning curve time where you start going to lose money. What's going to happen is your actual profits in the losing trades, because the losing trades teach you, lessons. So your equity curve is going to start doing like this, going to start doing like this. They're going to start doing the boom and bust, boom and bust, boom and bust, and then they're going to start going up, just like the stock. You in your day trading journey, you're going to be a consistent loser for a while, and you're going to learn these lessons. Then you're going to be able to kind of go into like a 50-50, which is a boom and bust. And then after that, you will actually, all these lessons will come together and everything is going to click and you're going to start making money. So realistically speaking, a demo account helps you out if you are very serious about it. Profit goals. I cannot tell you how many people, they start their trade and they buy here and it goes up, and they don't want to sell because all they heard is a tweet from Elon Musk saying things are going to go to the moon, whatever that means, and it goes up even more than what they were hoping for. They should have sold here. It goes even more than what they were hoping for, and they still don't secure their profits. They don't book their profits, and boom, comes right down. What they do is, oh, it's going to go up. Then it goes back down, then it goes back down. It never comes back up to even break even. And if you're an options trader, you probably lost all of your account on that. Just be careful. So understand that you have to secure profit goals. Not every dollar in the market or not every winning trade is your winning trade. So let's say you buy at $20 and your profit, you risk a dollar. So you buy here, and you say I'm not gonna lose more than $1. So it's right here. It's a fixed stop, fixed risk tolerance right here, and you're gonna secure $2 for that risk of a dollar. So you want to sell at 22. So it goes to 22, you need to sell it. It goes to 23, you definitely need to sell it, because you never know what's gonna happen. What if after you sell it, what happens is, this is the funny part. A lot of people, they actually come to the 23 and they sell and they secure their $3 per share, and it continues to go up, continues to go up, continues to go up. It will be one of those days it just never stops. And he would be here like, oh my God, why did I sell for $300? I could have made $3,000. Where was my mind? Yes, these scenarios happen once a year. It'll never happen every day. If you're serious about day trading, you're trying to pull money every single day like an ATM machine, you need to play the high probabilities game, not the exception. High probabilities saying if you risk a dollar, you will get $2 or $3, not $3,000. So be realistic about your profit goals. Then we gonna help you create a trading checklist and a trading plan. Creating a checklist is just like a pilot. A piece of paper in the front of you, you check what is your entry, what's your exit, what's your profit objective. Everything is already decided before you even enter that position or open your position. And we're gonna provide you with that. We'll help you out with that. So just make sure you have a trading checklist, you have a trading plan, and you follow that. And that's how you prepare yourself to be a profitable, consistently profitable day trader. Now, profitable and consistently are completely different things. Anybody profits in the market. That's why the market keep pulling more people, because most of the times, if you go into the market and your first trade is a winning trade, you're going to be addicted to it. It cannot be any simpler than that. But day trading is actually a complicated process if you're trying to make it, a career that you can pull money out of the market every single day. And when you lose your losing days, simple losing days. Winning days are 10 times as much as losing days. That's how you become a profitable consistently. What tools do you need to day trade? That's a very important question, right? What do you need to be a day trader? So let me orient you to what's on the screen right now. This is called a chart. Number one, you need something. You need some sort of technology, computer, smartphone, iPad, whatever you can actually open your brokerage app or platform on it, so you can day trade. Was of course the ticket stuff like that. Number two is a chart. What's a chart? A lot of people don't know what a chart is. There is another video in our library of videos. We can actually tell you what's a chart, what you're looking at. I'm going to explain it in a way that I'm just assuming you know what a chart is. I'm assuming you know what a candlestick is. I'm assuming you know what's open price, what's close price, what's low, what's high. I'm just assuming you know all that, because not every trader. This is not like most people actually they know about day trading. They're just not consistent. That's why they're watching these courses or videos. So you need a chart. What you're looking at here is Twitter, and it's a 5-minute chart, which means every candlestick is 5 minutes. Every bar is 5 minutes time frame. Okay, this a day was like pretty much flat. It's kind of was within a range, and this right here, that dotted line, is your prior day close. So it's kind of like more of a bearish day. You are kind of like flat under the prior day close, which translates to a bearish day. What happened here is, boom, an explosive bar. What we call it a trigger bar. The trading plan is going to explain you all of that. We have trading plan videos. I highly recommend you watch these if you don't know what I mean. So your trading plan says once you have a trigger bar, you buy. And that's exactly what happened. A trigger bar, followed up by kind of like more of a shakeout bar right here, and then another trigger bar. And of course, as this going up and down, that trader, you see that blue dot right here, that's when he gets, once it reached his the prior day close, once it pushed up above the prior day close, he buys in. He buys 100 shares, and of course he puts his stop where? His protective stop till below that support line. Second bar starts right here and it dumps down, but it has not hit his stop, so he left it. Third bar, you see the volatility, you see all these tails or the wicks, see how high and big these wicks are? That's volatility. So the third bar came in, pushed even higher. What happened with the fourth bar? Fourth bar, he actually, once it pushed higher again, boom, he secured another 100 shares. And let me just tell you, this guy has a very small account, but he is outstanding when it comes to execution. Day trading is all about execution. And he treated those two different entries as two different trades, even though they're considered one trade. So what he did is he had his stop right here, which I think was about 25 cents, but he had his profit objective as 3 to 1. So for the 25 cents, he was aiming to get a 75 cents profit. And boom, once he got it, he sold. Even though the market did not turn red, but he saw the volatility coming down, and he scored, I think in this one, he bought it at 42, and he sold it at 42.90. So he scored 90 cents for this 100 shares. The second 100 shares, He bought them here, he sold them here. That is 42.22, sold it at 43. So he scored 90 cents for the first one and 78 cents for the second trade. So his profit objective was 75 cents for the 25 cents he risked. What he scored in the first 100 shares is 90 cents per share, which is $90. For the second 100 shares, he scored 78 cents per share, which is $78. So 90 plus 78 is what? 171. He scored $171, risking $50. That's how you properly trade. So you need a chart. You need, of course, a technology, like computer technology piece, like computer or smartphone or iPad or iPhone. And you need a brokerage account. You need a trading plan that tells you where's your risk, where's your reward. And you definitely need a data, lifetime, real-time data from your brokerage account. So the trading strategy for this one's called trigger bar. His trading plan says if you have a trigger bar, you buy. And what he did exactly that. He saw a flat market. Saw a flat market right here, and a trigger bar happened. What did he do? He bought right here, right? So he bought his first 100 shares at $42. It went up and down, but never violated his stop loss, right? Once it's, because it didn't violate his stop loss, he bought another 100 shares here. The market is trending higher. It was flat, trigger bar, followed by a couple of trigger bars, even though this bar was kind of like scary to him. Okay? And the second 100 shares, he bought at 42.22. His profit objectives were 3 to 1. He risked 25 cents. For this one, he was looking to get 75 cents per 100 per share. So what he did is he did just that. He sold right here at 42.93. He bought at 42, sold at 42.93. So he scored 93 cents